Good morning, everyone. Welcome to Weekly Profit Talk. That's right, we do this every single week. Uh, we do this on Wednesday at 8:30 a.m. Mountain Daylight Time, or MST in the winter. That would be 7:30 for you California folks, and if you're out in Florida, it's 10:30. So again, good morning, welcome, happy Wednesday. This week's topic is Monday was the tax deadline most doctors fly by on autopilot. Monday was June 15th. There are four estimated tax payment deadlines each year, and June 15th is a little bit offset. It's kind of crazy because it's supposed to be quarterly, but it's only 2 months after April. So if you didn't remember it at all, this is, by the way, hopefully kind of a wake-up call for you. What you want to do, if you know you're going to pay over $1,000 in tax that there will be no withholding against, and if you run an S corporation or a business that doesn't have withholding taken out of your money or taken out of a substantial portion of your money, you need to be making estimated tax payments, including the one that you just missed. So if you did, congratulations, job well done. But I want to talk a little bit about what that means and how important it is to make a estimated tax payment based on data and not on guesswork. So why don't we go ahead and begin? Appreciate your patience here for just a second. Okay, so it's the deadline that nobody circles, right? Because again, it's only 2 months after the April 15th. That's the one everybody knows. There's an estimated tax payment deadline. It lands on the same day as the IRS Form 1040 deadline. So everyone knows that one, even little kids. But June 15th, not so much. It barely lands 2 months after the spring panic, which is why it's easy to just blow off. There's nothing to really jog your memory. And even if you have an accountant, they're probably not calling to remind you about it. Okay, it's possible. Most practice owners do one of two things if they do anything at all. They repeat whatever they paid in April, or they just send a flat quarter of last year's tax bill and call it discipline. Both are guesses wearing a lab coat. Okay. Why the autopilot number is almost always wrong. Last year's tax bill describes a practice that no longer exists. So if you're basing your estimated tax payments based on last year's tax, it's basically a hallelujah wild shot in the dark, right? You might have added a provider or lost one, or maybe you raised your rates. A payment built on last year's figures assumes none of that happened. And another thing that's very important is when you overpay, you're handing the IRS an interest-free loan that you're not going to see again until the following spring. That's right. They keep the money. You lose the power of earning any interest on it. And they basically strip you of your spending power. So if you lean on a stale number, you might dodge the penalty and still walk straight into an April balance due that you never budgeted for. That's a possibility too. What if your uh, practice is doing significantly better this year and you're making last year's payment? You could be dramatically underpaying. Neither of these is a result of a decision. Both are basically the result of the absence of one. A historian reports, a strategist adjusts. A few weeks ago, I'd been making the case that your accountant is a historian, gifted at telling you what already happened and powerless to change it. Monday's deadline was where that gap stopped being theoretical. Okay? The historian computes your estimate from a return that closed months ago and then moves on. Now, a forward-looking advisor does what last March chart's note cannot. Your practice's cash deserves the same standard of care that you give every patient, measured now, adjusted now, while you can still act and do something about it. This is the difference between four guesses a year and four decisions a year. So, to wrap up, what we're basically saying here is that good estimated tax payments based on actual data, each of the four periods are going to give you slightly differing information each of the four periods, but they will be based on the actual performance of your practice. This is what I refer to as annualization, and that's not my term. I didn't make it up myself, but if you create estimated tax payments based on annualization and the actual performance of your practice, then you're closely matching um, the tax payments that you're making to the actual revenue that you're making that creates them in the first place. We call this the matching principle, and it's really the best way to do business. You're not overpaying, you're not underpaying. The sweet spot is basically $500 above or below. So if you owe less than $500 to the IRS when you file your taxes, you've hit the bullseye. Or if you happen to get a refund, but it's less than 500. I would tell you that if you're at 1,000 and 1,000, you're still in decent shape. I just shoot for 500 with my clients because I have the ability to do that and I work with them all year long. So if you're interested in having that kind of guidance in your practice, I am coming to you on one of the three different media that you're watching on either live or on replay. That would be YouTube or LinkedIn as well as Facebook, and you can make comments on all three of those. So if you'd like more info, just type more info or help or free call because um, we'll reach out and we'll provide you 30 to 45 minutes of a free conversation to discover whether or not it resonates for us to work together. And if it does, we can begin providing you the same kind of help in your practice that we're already doing for a number of other people right now. So we do have a couple of slots left, and I'd love to have that conversation with you soon. So hopefully this finds you well, happy, and beating the heat with summer. Yes, as a matter of fact, next Wednesday it will be summer. It'll already be the 23rd. So until then, I hope you have an amazing Wednesday and rest of the week. When you have a chance today, do something randomly kind for a stranger. So until next week, Wednesday at 8:30 Mountain Time for our next weekly Profit Talk.